Hello, trading is closed on January 11th, 2019. My last call said there were mixed indicators, so the commonest thing would be the gap promptly move outside the day's range. That didn't happen. Next common was the close little changed. We did that off 0.38, and when you close little changed, should be a big move the next day. Sometimes you get one more day, clicking little change, but I'm not predicting that. There should be a big move. Now, during the day, MEJT said ultimately lower prices and higher price it would print. They did. Said the lower price would print. They did. Said this rally was false and prices would retrace. Once again, we have mixed indicators. So the commonest thing is we have a gap promptly move outside the day's range. So we're looking for a large move, ideally starting with a gap outside the range. Now what's positive? It's positive when you rally all day on a Friday. Almost always you continue the rally Monday. If you gap down instead, it's big trouble. It's also positive when you start low and end high. Almost always the rally continues. If you gap down instead, it's not good. So those are the positives. What are the negatives? Well, here's the McClellan oscillator on the NASDAQ. At the lows, it was hugging the Bollinger Band and then turned. You're now at extremely overbought levels, and today it turned down. It's a sign of a top. We've now rallied all day for 2 days straight without accomplishing anything. And by accomplishing something, I mean you have to take out Wednesday's high and hold it. We took it out at the close on Thursday, but we gapped down, and since this open is a surrogate for this close, this break doesn't count. We did break the high at today's close, but with 5 minutes left to trade, prices were under all these prior highs despite rallying all day long 2 days in a row. That's not good because a breakout in the last 5 minutes doesn't really count. It's not how serious money trades. We also have a Hobson close right at the high of the day. Now, if you're rallying and hitting new highs all day long, it doesn't mean that much. But if you've been struggling and struggling all day long, can't break out of the midday high, and right at the last minute, break out to a new high, the assumption is it's not smart money that's doing a buying, particularly when right after the close, this gets reversed. It's clear that big money isn't going to wait till the end of the day to break out to new highs. People buying here are probably closing out positions, not wanting to be short over the weekend. And the only ones left to buy the stock from them are the pros. And the pros are going to set a price where they get their money back quickly and usually a lot more. Closing at the high of the day on a day like this and the 1 cent doesn't make a difference. Very often is followed by gapping down. Trying to get my next thing here. Now we're trying to pick the top of wave C. This had been the count. I said it would still work if this were an expanded flat. I suppose that doesn't break any rules. But there's a clearer count just by recounting wave red C. Everything works. Here's red A. Here's Red C right at your 78.6. Expanded flats here. And all these internal structures work. We're looking for a big move Monday, ideally with a gap. My best guess is we're going to gap down, take out these lows promptly, and if that's the case, I think we can be convinced that the ABC up is over. Wouldn't surprise me to see these numbers print, and we have targets more than 100 points lower than that before we're through. As always, if I'm wrong, we'll gap smartly in the undesired direction. That's a standard rule, whether I say it or not. So we'll know before the open if that's going to work. But that's my call, looking for a gap, prompt move outside the open. Almost certainly the move's going to be down. And that's today's call.